Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. The capital markets are very subdued. Equities are more stable. Notable exceptions to Asia were China, Hong Kong, and Taiwan. Stoxx 600 Europe has recovered most of its losses last week with a 0.6% drop. The U.S. futures are stable to firmer. The dollar is generally more flexible, with the Australian and New Zealand dollars leading the charge. The yen and euro are unchanged. The gold market is quiet in a $4 range, centered around $1,775. September WTI was resold after trying to resurface above $90 per barrel. Tomorrow's market assessments will be provided by OPEC and IEA. Asian Pacific market. China's July trade surplus surpassed $97.9 million in June to reach a record $101 billion. Japan has suffered a decline in terms of trade. In June, Japan recorded a JPY 1.37 trillion deficit in trade. This led to a JPY 132.4 billion deficit in the current account, the first time since January. The US dollar edged slightly higher than the job-induced high it had seen against the Japanese yen before the weekend. It stalled at JPY 135.60. The greenback has recovered more than half its losses due to the recovery in U.S. yields. The Australian dollar is close to recovering its losses from the weekend, testing the $0.6975 zone. Market of Europe. Moody's had cut Italy's outlook to stable from negative before the weekend. It pointed out the increased risks resulting from Russia's invasion in Ukraine and the political uncertainty that followed the fall of Draghi's government. Italy's political drama will be center stage with a national election scheduled for next month. The disruptions caused by Russia's invasion in Ukraine, post-COVID supply chains disruptions, and tightening monetary policy are all contributing to economic tensions. According to some estimates, it is the hottest in Britain in 90 years. Sterling trades in a range today. Friday's economic highlight will be the preliminary look at the second quarter GDP. Today, the euro is just a little over a half of a cent below $1.0215. Market of America. The strong employment report countered the softness in weekly jobless claims and ISM survey. Last month saw almost 530,000 job openings filled, which was more than double the expectations. The market recognizes that there are no new leaks, and the strength of the jobs data eases the pressure to declare the current situation as a crisis. This increases the likelihood of a 75 BP rate increase next month. The Canadian dollar was affected by the divergence in the reports on jobs before the weekend. The US dollar hit CAD 1.2985, the highest level in almost 2 weeks. Today, it is consolidating. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.